We went from investing 250 million in Bitcoin to 425 million in Bitcoin to eventually a billion in Bitcoin to 2 billion in Bitcoin to just slightly less than 4 billion.
You said there are decades when nothing happens and there are weeks when Bitcoin happens.
So every decade there's some profound paradigm shift. It's such an out of the blue idea that no one can conceive of why you would even want it. What you've got is a lot of people questioning all their premises, and rising through that chaos is a new idea. What if I can encrypt energy? What if I can encrypt money such that nobody on earth, no government can debase it, no corporation can steal it? I don't trust anybody. I'm going to create a shared immutable ledger, incorruptible, immortal, transcendental ledger. If I can transfer $1 million of value from me to you without an intermediary, that means I have transcended the political realm.
You said, Brian, I like Bitcoin because it has low aspirations.
The idea of Bitcoin was, how do I create a protocol that's fair and equitable that I give as a gift to the world that no one can control? If you're going to do it and you understand thermodynamics, and if you have any sense of genetics or biology or physics, you realize you need to be very humble in your aspirations. How do we give the gift of property rights, freedom, and sovereignty and empowerment to everybody on the planet? The best idea 30 years ago was YouTube or Google Maps, Twitter or Facebook or email. I think the best idea for the next 30 years is digital energy. Everybody can own their stuff and nobody can take it away from them.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Michael Saylor, the American entrepreneur, technologist, author, and Bitcoin evangelist. You recently became executive chairman of MicroStrategy, having spent the last 33 years as CEO, with your change of position allowing you to focus even more on long-term Bitcoin strategy. You are the author of the New York Times bestselling book, The Mobile Wave, How Mobile Intelligence Will Change Everything, which correctly predicted the sharp rise in technology giants Amazon, Apple, Facebook, and Google, while highlighting the impact of mobile and social networks on global economic development. You previously described Bitcoin as the apex property of the human race, and over the past 2 years, you pursued a massive investment drive that has seen MicroStrategy purchase over 129,000 Bitcoin. As the unofficial spokesman for the Bitcoin movement and the most famous maximalist of them all, you believe that Bitcoin represents the digital transformation of money, property, currency, energy, and matter. Michael, welcome back to London Real.
Hey, thanks for having me, Brian.
Hey, it's great having you back here. I want to quote you, and I don't think you said this probably in the last couple months, but you said there are decades when nothing happens, and there are weeks when Bitcoin happens. And it's been 14 months since we spoke, but it feels like it's been years and years and years with everything that's happened since we talked. And I kind of wanted to maybe get your thoughts on kind of the year in review and the things that stick out in your mind. And I don't know where to start. You know, do we start with Celsius and Voyager going bankrupt? Do we start with the failure of UST? Do we start with Bitcoin going to 68,000 and back to 20? Do we start with the ETH merge, or recent statements by Gary Gensler of the SEC saying Bitcoin's a commodity and everything else is a security? I don't know. What's the highlight for you in the past year?
I think that the highlight in the past year is the institutional adoption of Bitcoin and the maturation of the asset class, along with the education of millions and millions of people as to why they might want digital property, what is a digital commodity, and what's its place in the macro economy. Now, to be clear, I still think we're very early, but that phrase, there are decades when nothing happens, and weeks when decades happen. It really refers to paradigm shifts, and if you think about the paradigm shift when automobiles arrived, there's the famous snapshot in New York City where there's just a bunch of horse and buggies, and 10 years later it's all cars. And in that 10 years, you adopted it. And I remember, standing once on the Pantheon and, or on the Acropolis, and I'm like taking a photo and about to post it. And I think to myself, what's different about this? And I think, well, last time I was here, maybe a decade ago, I had no smartphone. I had no iPhone. There was no Facebook. There was no Instagram. You couldn't post it. There were no, digital photography didn't exist. So a decade goes by and you're like, you're trying to remember, you remember back in college, I went to college, we didn't have laptops,
Yeah.
So when I was in college, there were no laptops. And I thought, well, what if I'd had a spreadsheet when I was doing engineering? I went with an HP 15C calculator, and we had notebooks, and we wrote down 20 pages of calculations in a notebook with the calculator, and I remember seeing people saying, well, you got a calculator? We use slide rules, and you fast forward a decade and people have laptops. You fast forward another decade, they have internet. You fast forward another decade, they've got YouTube and simulations. And now you're starting to question whether or not you even needed to go to college at all. Maybe you could have just sat at home. So every decade, there's some profound paradigm shift. And the thing that hits you about a paradigm shift is it's such an out of the blue idea that no one can conceive of why you would even want it. So, it took a while before people thought maybe radio waves have a place, right? Or maybe electricity has a place in the world. And why would I want a railroad? But I think now we're studying this paradigm shift of digital energy. And why would I want to move a block of $1 billion of something from point A to point B through cyberspace in a split second with instant final settlement, right? Initially, if you roll the clock back a decade, we didn't have it. Every financial crisis we've had, right, in the history of the world, and we've had 10,000 of them. There have been 10,000 currency collapses, from the Lydians to the Athenians to the Spartans to the Romans to the Venetians, to the Brits multiple times, to the Carthaginians. You could just go on, and the Persians, and go on and on and on and on. And the history is full of examples of an empire rises, someone mints a currency, the successors or the children of the conqueror debase the currency, the grandchildren debase it more, the great-grandchildren forget how they actually got the power, they spend everything, go wacky crazy, pretty soon the economy collapses, you can't pay your soldiers, they all defect, and the barbarians come over the gate and they take everything, including your debased gold. They melt it down, they purify it, they mint their own coin, and the cycle starts again. That's literally taken place 10,000 times. When von Schliemann dug up ancient Troy, he dug up like 19 ancient Troys. He found 19 cities buried under each city. Everybody said, good place to build a city. They would build it. They would rise over a couple hundred years. They would crash and burn. 200 years would go by. Someone else comes along and says, wow, good place to build a city. We do it again. We do it again. We do it again. That's the history of money. And that's the history of economics. Along comes Satoshi, and we've got the white paper, and, January 3rd, 2009, we launched this little monetary virus or this idea virus. And it kind of burns very, very low level for a while, and people aren't sure of it. It's a gimmicky thing, and it gets bigger and bigger and bigger, and waiting for, well, why would you need it? And you had to be a visionary to kind of need it or get it. If you lived in Argentina and your currency collapsed, and you remember the currency collapsing, or if you lived in North Korea, or if you lived in Africa and your currency collapsed, and you watched your family get wiped out, then maybe you get it. But that wasn't the mainstream, right? The Western world is not run by people that lost their family's life savings in Africa or South America. So it was an interesting idea, but it was a fringe idea until 2020. And in 2020, the monetary inflation rate tripled in the US. And what we saw was, in the world's best economies, you're losing 15 to 20% of your economic value in the currency every year. In the second tier economies, you're losing 30% or more. Like the Japanese yen is down 24% against the dollar in the last 12 months, right? And in the tertiary economies, you're losing 50, 60, 70% of the value in the currency. And that's where you get a Sri Lanka, where literally the entire government collapses, or what you're seeing going on in Africa and Zimbabwe right now, or famously in Lebanon, where people have been breaking into banks, taking people hostage to get their own money back, right? The bank robbers are robbing banks, and their demand is, give me my own money back, because the government stole the money and the banks froze it, devalued it, and they're going to give it back to you over the next 17 years, devaluing it 20% a year while they trickle it out to you. So here we are. We're in this great reset, if you will. People are questioning currency. They're questioning their political thoughts. They're questioning stores of value. And every conventional model, the 60-40 bond model, it's broken. Bonds, for example, are down 20% in the same year where stocks are down 20%. Okay, so that never happened for 20 years. So why does that happen? Because when you drive interest rates to zero, if you can't drive interest rates negative, then there's no way to get bonds to go up. So what we've got is the 60-40 models are broken. Conventional ideas like, oh, I'm just going to store my value by buying property, that's kind of broken in a lot of places. People are losing faith in just investing in property when you see the gyrations of this property. The conventional idea, I'm going to buy S&P index stocks. Well, the S&P is slightly up. NASDAQ is flat over the last 2 years. It blasted up and then it blasted down. So what you've got is a lot of people questioning all their premises, and rising through that chaos is a new idea. And the new idea is, what if I can encrypt energy? What if I can encrypt money such that nobody on earth, no government can debase it, no corporation can steal it? I don't trust anybody. People don't trust governments, right? We're at an all-time low in public trust of institutions. It doesn't matter what government. And they don't trust companies. And why? For good reason, because companies are influenced by governments, right? Right? If you're in America, you're certainly not going to trust a company in China. And if you're in China, you're certainly not going to trust a company in America. And then, a lot of people that don't trust domestic companies, and the Europeans and the Australians don't trust American companies either. So there's a lot of lack of trust. So if I can't trust that, then what can I trust? Where am I going to put my money? I'm going to do a slight detour here, Brian, but this is very interesting that I want to share with your listeners, which is I track the financial market since we embarked on our Bitcoin strategy. So here is what's happened since August 10th, 2020, when we adopted Bitcoin as a treasury reserve asset. Bitcoin is up 65%. MicroStrategy stock, and MicroStrategy's bought almost $4 billion, not quite, but nearly $4 billion of Bitcoin. MicroStrategy stock is up 66%. So we are tracking slightly ahead of Bitcoin. The S&P is up 14%. The NASDAQ is up 4%. Whoa, 4%. All of big tech is up 4%. Gold is down 18%. And, bonds, the ultra safe bonds, long-term bonds, down 18%. Oof. So in terms of asset classes, the crazy volatile Bitcoin is the best performing of all those major assets. And then you can say to yourself, well, I'm just going to invest in stocks. Okay, let's look at big tech. Google's up 37%, Apple's up 32%, Microsoft's up 16%, Amazon is down 22%, Facebook is down 45%, and Netflix is down 52%. Okay, MicroStrategy, little MicroStrategy, no one ever heard of, up 66%. Would you have guessed that a mid-sized software company, low growth, mid-sized software company nobody ever heard of, would outperform Google in the last 2 years by a factor of 2? And so last point I make, we compete against companies 100 times as big as us. Oracle, 100 times bigger than us. They're up 25%, IBM's up 3%, Salesforce is down 23%, SAP's down 47%. Okay, so what is the lesson of that? The lesson is we're in the middle of chaos. There is no place to hide. Your choice is you could buy gold, but gold is dead metal and it's just getting ground into the dirt, right? I can seize your gold. Gold is the half-life of money, and gold is 35 years. And you can't put gold on 8 billion iPhones. So the problem is there's no tech in gold, and it was a good idea in the 19th century, and it's centralized. Governments can seize it, and the gold miners keep debasing it. They keep mining more gold, right? In the best year, you get 2% more. In the worst year, someone seizes a bunch of gold, dump it on the market, you get more than 2%. So people are looking for a safe haven. What's it going to be? Property in Africa? Property in Venezuela? You can't have property in North Korea. Property in Argentina? A business? A business where? A business in Argentina where the currency collapses? What good are your cash flows if the currency that you generate the cash flows are collapses in value? So I think here's the big idea, really big idea. Everybody in the world has to decide where they're going to locate their family. They have to physically. They have to decide where they're going to locate their themselves in cyberspace, their mind. Are you going to watch Facebook all day long? Are you going to read Twitter? Are you going to be on YouTube? You're going to go to Rumble? Are you going to look at Instagram? Right? Where is your mind? Right? And then the third question is, where is your business? Are you going to run a yoga studio in Miami? How about a yoga studio in New York? How about, are you going to run a farm in Zimbabwe, a ranch in Argentina? Are you going to buy a company that has business interest in China? How about owning a bunch of businesses in Ukraine or Russia? Right. So where is your P&L? Right. And the fourth big idea is, where is your balance sheet? Okay. You're a podcaster on YouTube. Okay, well, you better make sure that you comply with YouTube platform requirements. Otherwise, they turn off your podcast and they crimp your business. That's where you generate your revenue and you generate your cost. But now, where are you going to save your money? Are you going to save it in U.S. sovereign debt? Are you going to actually store it in gold? Are you going to buy land? Where? In California? In Ukraine? In Russia? Where? In Florida? Right? Are you going to buy S&P index stocks? Are you going to buy Bitcoin? Are you going to buy art? So there were conventional answers to all these questions, Brian, and they kind of worked for, there was an answer to this question before 1914. There was an answer to this question between Bretton Woods and 1971. There was an answer to this question from 1971 till the year 2020. In 2020, it's like, the answer, 60-40 bond portfolio, buy the S&P index and like a portfolio of diversified bonds and you're good. Okay. There was an answer. The answer kind of got confusing after 2020. The answer got confusing for a lot of businesses, for a lot of people. And so highlight of the year, The highlight of the year is people were stunned from March of 2020 to March of 2021. And from March of 21 through the middle of 2022, they're all starting to get their bearings, and they're like, well, I guess, what is Bitcoin? A digital commodity? Do I have to deal with that? Well, now Fidelity's talking about rolling out the 34 million retail accounts. You've got the government embracing crypto assets, saying we better figure it out. Congress, senators getting educated on it. The CFTC, the SEC getting educated on it. Big institutional investors starting to take Bitcoin positions. The media now you've got Bloomberg covering crypto. You've got CNBC covering crypto. You've got an entire world, media analysts, politicians, financiers, and they're all starting to figure this out. But I still say we're early, right? This paradigm shift takes a decade. And maybe the first decade was the embers of a flame flickering from 2009 to 2020. And then from 2020, we started pouring gasoline on that flame, right? The gasoline in the US is we triple the inflation rate, monetary inflation. But forget about that. Maybe you're a blue blood living on the Upper East Side with a trust fund and you just don't see why you need it. The gasoline in Sri Lanka is everybody lost everything overnight. The gasoline in Lebanon is the bank freezes their doors and you lose all your money. The gasoline in Argentina is the peso goes from 20 pesos to the dollar to 280 pesos to the dollar in 4 years. Right? The gasoline in Ukraine is oops, there's a war. Banks are, there's a limit to how much money you can withdraw. And the gasoline in Russia is, okay, I get, the stuff you thought you owned in Europe, you don't own that anymore. We're taking that from you. Taking your gold, taking your bonds, taking your yachts, taking your villas. So there's a lot of people with a 2x4 to the head, and they're all stunned, and they're all trying to figure it out. And there's this colorful debate, a political debate, a media debate, a debate on YouTube, a debate on Twitter. What's the solution? And the only thing we can all agree on is we probably need to look at some new ideas because the old ideas just don't work anymore. And there's no intellectually honest person that would say, yeah, everything I believed in 2019 or 2018, it's all still true. I haven't changed any of my opinions about anything. I mean, everybody's had a place in their life where they've been jarred and stunned, and now they're trying to make sense of it. So the question is, how do we move forward? And, to summarize on Bitcoin, I think Bitcoin is it's very volatile. It's getting jerked around. All risk assets are getting jerked around. If you look at one of the more interesting things, right? The 2-year the 2-year Treasury was 16 basis points a year ago, and it's currently like 3.9%. We went from 16 basis points to 390 basis points on short-term money. The mortgage rate on a 30-year mortgage, has gone from 2.7% to 6% in 12 months, right? Crazy. The yield curve is inverted. You get paid higher interest on a 2-year loan to the federal government than on a 30-year loan. The 30-year loan is 350 basis points. So summary of all this, it's this. We had an unprecedented expansion of the money supply in March of 2020, where we just pegged interest rates to zero. And the banker said, we're going to keep interest rates at zero for the next 4 years. They literally implied, they said, not until 2024 will we raise interest rates. Okay, well, that's one panic. And now we've got the other extreme, which is the fastest tightening of the money supply, like one of those oh crap moments. Oops, I think we overdid it on one side. Now we overdid it on the other side. And what you see is risk assets. They're all getting hammered down, Bitcoin included. But look, all financial assets, bonds hammered 20%, NASDAQ hammered 30%, S&P, gold hammered, silver hammered, and Bitcoin hammered. But on the other hand, tangible assets, oil, natural gas, food, any type of energy, they're all shooting up. Right. And I think people are going through this moment where they're like, I guess I'm going to freeze to death or starve to death unless I have some of that tangible commodity stuff. And the financial stuff, I guess I'll trade it. And meanwhile, the politicians, they play with the little knobs, attempting to do good. And it turns out that it's very difficult for humanity, for any human being, to actually make adjustments fast enough and intricately enough so that they can do good without probably doing more harm than good. And that's where we find ourselves right now.
Yeah, and I grew up on the U.S. yield curve, because when I went from MIT, where we both graduated, I went straight to Wall Street, and I was trading fixed income derivatives. So I grew up on 3% overnight rates, 6% long rates. I traded a swap book that traded as a premium on top of that for interbank rates. And it pretty much stayed around there for the next 10 years. Okay, so a couple times we had a flat curve. I think the bond yield got up to 8% maybe. But there wasn't QE back then, and it behaved like it traditionally behaved. What you just said boggles my mind, that a 2-year note could go from 16 bips to 390. That's just, the beauty of the fixed
in 50 weeks.
That's crazy. I mean,
50 weeks.
And it's such a massive market for people that don't know. It's so big, and that's why it usually doesn't move much, and it can still move markets. And now it's all over the place. Like you said, we used to believe that the Fed had some control over the economy. Now it's not obvious that they have any control, or that what they do helps the economy. And yeah. It's a good point. If you go back to MIT right now and take an economics class and raise your hand and say, is that really true what's in this textbook that's 5 years ago? Your professor, can he look at you with a straight face and say yes? I don't know. Be worth of us doing that, maybe, to go back to Sloan School and say, do you really think that's true? And would they have a discussion about Bitcoin? I don't know. Maybe they would. Michael, I think it's important for people to hear your background, because you said, Bitcoin was, created kind of out of the financial crisis in '08, and you might not have cared about it unless you had faced a currency collapse. If you hadn't have watched what happened in March of 2020, would we be sitting here talking about Bitcoin? Would you have 130,000 on your balance sheet? If that had never happened, would you have noticed it?
No.
Right.
Well, here's what I would do. I sort of notice it's some techie thing that's interesting. And it's in the category of, do I want to invest in some startup or some Instagram competitor or Snapchat or Uber or Bitcoin or Airbnb or, WeWork? It's just another thing that may or may not work that I'm not paying that much attention to. I think that if you I did have a business in Argentina, and I watched a currency collapse in Argentina where we lost nearly everything. Like, we lost all of our profits for a decade. And overnight, we had all our money in a bank, and it was in dollars. It was an American bank in Argentina.
Really?
And the American bank sealed itself. The government sent an edict to the bank. The bank converted our dollars into pesos at $1 per peso. And then the next day devalued the peso 10 for 1. And we lost 90% of our money in one day. And in an American bank holding in dollars. And luckily for us, it was a small part of our business. So it's kind of like someone just chopped one of your fingers off, but they didn't chop your head off. Now, if you'd lived in Argentina and you had 100% of your business or your assets in Argentina on that same day, you didn't, lose 1%, you lost 90% of everything. So I kind of knew intellectually that this could be useful. But it wasn't a visceral near-death mortality facing event, right? You don't really get religion until someone says, next Monday, everything you've got, I'm taking it all. If you stay here, right? And so when you have that kind of come to Jesus moment, then you get religion. So I think that for us, our come to Jesus moment was March of 2020. And it's just, we got to the end of the line where I'd spent a decade trying to use conventional models and conventional techniques, use treasury bonds as a treasury asset and do stock buybacks and just work harder. Right. You work harder and you use conventional techniques, but you're making no progress and you're just getting beat to death. And I mean, at that point, I wasn't looking at, we still didn't have the Sri Lanka, Argentina, Zimbabwe type situation where your money is losing value at the rate of, I think 90% of the value drains out of the Venezuelan bolivar every year, right? It wasn't that bad, but I think that in 2020, I realized the half-life of money, the half-life of energy or wealth stored in the currency was 36 to 48 months. So I looked at $500 million and I said, $500 million stored in US dollars at a 15 to 20% monetary inflation rate, divide 20% into 70, right? The rule is 70, and you'll think, okay, got 3.5 years and half of it's gone. So I think I got to that point. And the significance of that for me, Brian, was I realized at that point that holding 500 million in cash at a 15% monetary inflation rate means that you lose 75 million a year on your balance sheet. And the best I could hope for is 2,000 people working themselves to death, doing 100,000 things right every year, everywhere in the world. And if we didn't screw up anything, and if everybody worked themselves to the bone, we could make 75 million.
Right.
So I had this inflection point where I realized everything we're going to do for the rest of our lives is going to be negated by the inflation on our balance sheet. And that's the point of hope, despair, and indifference, where you're like, it just doesn't matter what we do for the next decade because we can't get ahead. Now, that's a slow death, right? I've used the phrase, right? The road to serfdom is working exponentially harder for a currency growing exponentially weaker. Just a road to serfdom. That's a slow death. But if you took yourself and you dropped yourself into Venezuela or Zimbabwe, and I just told you, or Argentina, it's the same idea, but instead of a slow death, it's just a fast death, right? You might as well just open up a vein and let the blood drain out, right? It's not like giving a pint of blood a week. It's like giving a pint of blood a day, or I just open up the vein and I just bleed out, right? I mean, that's what hyperinflation is. So I would say we were jarred out of our liturgy or jarred out of our conventional thinking because of that crisis. And then we had this couple of advantages. One, we had a huge balance sheet. And so if you were running on 500 million in debt instead of 500 million in equity, right? When you're running on 500 million of equity at 15% monetary inflation, it costs you 75 million a year. But when you're running on 500 million in debt, you're actually getting 75 million a year. So you see, right. If you're an indebted company, you wouldn't be as sensitized to that. So we happen to have a lot of cash. We had positive working capital. And then we had a company with a fairly tight board, 5 people. We knew each other and a very smart, engaged executive team and engaged board. And I'm the controlling shareholder of the company. So we didn't have to worry that we would have some hostile takeover activists that would just immediately target us if we were to get outside of the conventional bounds. And so we had sort of not much to lose. We had something to gain. And our option was a fast death. We give the 500 million back to the shareholders, and we just get beat to death by Microsoft and Oracle, or a slow death. We keep the 500 million, but we just gradually get whittled down at 50 to 100 million a year. Or take a risk You ride out from the castle or the citadel, and you make a stand on the plain, and you fight that battle, and you may win or you may lose, but you know that if you just cower in your citadel, when you get surrounded, you're going to get starved out, choked out, they'll cut off your water supply, right? There's no way you're going to win unless you make a stand. So we decided that rather than the slow or the fast death, we would go and do something and take a risk. And it's a very intricate story, which is probably beyond the scope of this, but the short of it is about 10 different transactions, a Bitcoin, a share buyback, a Dutch auction, equity raises, junk bond, convertible bonds, lots of communication to the street. And we went from investing 250 million in Bitcoin to 425 million in Bitcoin to eventually $1 billion in Bitcoin to $2 billion in Bitcoin to just slightly less than 4 billion in Bitcoin. And the result I just said, right, for our shareholders, our stock outperformed every big tech company, every asset class, and every enterprise software company. I think we did the number and we calculated we outperformed 485 of the 500 S&P companies over that time period. And then in terms of the corporation itself, we added billions and billions of dollars to the enterprise value of the company. So it's paid off so far, even though we get thrashed this way and that way by volatility.
Right.
Now, the war in Russia, the war in the Ukraine, the utterances of the Central Bank of Europe, the utterances of the Federal Reserve, all of those things impact our stock and impact our shareholders. But, better to get out. It's another analogy. You're in a rowboat, you're rowing 3 miles an hour. The wind is blowing against you 20 miles an hour. The current is 10 miles an hour. You're never going to get to your destination. You will starve to death before you get there. Your choice, reach down in the hull, put up the sail, tack into the wind, and now you're sailing with the wind. And you know what? You're actually going somewhere, and you probably will get to your destination, but you're going to actually get jerked around by the storm, and it's going to be a fast ride and maybe a harrowing ride, but you have life and you have an opportunity because you've harnessed a new energy source, and the old strategy was going to kill you. The new strategy it's scary. I got to learn to sail. I got to learn to fly. It's invigorating. It's different. People are going to think you're crazy, but they wouldn't be talking about us, and we would be just very quietly starving to death or getting squeezed out of existence while we didn't really bother anybody or threaten anybody had we not done what we did.
Right. Okay. I like the decision you made. I think it was the right one. Question, is there a price of Bitcoin where things get interesting for you as far as where, I don't know, not that you get stopped out, but where as a leverage position gets where it's like, okay, now there's an issue where I might have to liquidate Bitcoin. Is there a price there? Is it 12,000 or 13,000 where that's an issue, or is that not the case?
No, we've been pretty artful about this. For example, the first 425 million, almost the first 500 million was equity. And then the next 500 million or the next 1.7 billion was convertible debt, but it was converting into equity, and it's unsecured debt. So it's not related to the Bitcoin. It just becomes equity at some point in the future. And then the next 500 million was a junk bond, but that was secured against the cash flows of the software business, which is very stable. That can be refinanced in the future, and it was a 7-year junk bond. So again, not really correlated to Bitcoin. And then the next billion was an ATM equity issuance. We issued $1 billion of stock. So you see, we've issued a lot of equity, and then we've financed other parts of the business. It was only the last 205 million where we pledged some Bitcoin as collateral. So that's our famous Bitcoin-backed loan, or Bitcoin-backed, loan facility with Silvergate. And we calculated that when we did that, we were 20x over collateralized. Like we had 20 times as much Bitcoin as the loan. And right now we're probably 10x over collateralized. I think if Bitcoin got down to 3,500 a Bitcoin, then we'd have to come up with some other collateral.
Okay.
But, we just announced another $500 million at the market equity shelf registration. So we've just used a balance of equity, long-term debt, secured debt, unsecured debt, just a very thin layer of borrowing against the asset itself. And we primarily did that just to prove it could be done in order to legitimize it as an asset you could borrow against. So the answer to your question is, I don't really worry so much about that. It's at some point if Bitcoin gets to 2,000, then I have to adjust something, but not so likely. We had quite a big buffer that we built into this.
Are you buying more or plan to buy more?
Yeah.
Okay.
Yeah, we are.
I remember when you were here last time, I said, how are you going to buy it? And you were like, oh, we'll buy it up to 250,000. Like, I remember you just said that just resolutely, like this for the next 1,000 years. You're like, I'm happy to keep buying this. I don't know if you remember.
We still got the same, question, which is, if I have an increment of $10 million of cash flow, do I put it into bonds? Do I put it into gold? Do I buy silver? Do I buy land? Do I buy art? Do I buy Bitcoin? So I still think Bitcoin is the most scarce, most desirable, highest quality property. It's a long-term store of value. So I think generally for us, we've adopted a very simple strategy. We keep enough working capital to last us a year, normally in the range of about $50 million in US dollars. And then when we have excess cash, either from operating income or any other financing opportunity, we put that into our treasury reserve asset. And we have adopted Bitcoin as our primary treasury reserve asset. So we're 100% treasury reserves in Bitcoin. You might decide that you're going to split your treasury reserves 1/3 property, 1/3 art, 1/3 Bitcoin, or 1/3 S&P stocks or something, right? It's a preference for an individual or an investor. But of course, our company, MicroStrategy, has adopted a Bitcoin strategy, and we have transparently communicated that to all of our outside shareholders, and that is in our 10K filing. So when someone buys MicroStrategy stock, they know what they're getting. They don't want us to hedge or juggle 16 different assets. So if I showed up and said, hey, I found it, we can buy a Picasso and I got a good deal on it, we think that's better than Bitcoin, all my shareholders would freak out because they don't want to invest in an art hedge fund or a real estate hedge fund. They want someone that's got a Bitcoin strategy. So from a corporate point of view, it's the right thing for us to do. I personally think it's the highest quality property in the world, and I think it will appreciate the best over time. And as I pointed out to you, it has performed the best in the past 2 years versus every other option. So we've been right over a 2-year time frame. I think we'll be right over a 4, 8, 10-year time frame. But even if it turned out that your Picassos were better or your Rolexes were a better investment, we're running a publicly traded company.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.